What's good, YouTube? So we're in short here. First trade of the day. All right, we had this bearish for value get respected. That red line going across is a 1 minute wick. Consequent encouragement I'm watching. And then you see me marking out this volume imbalance here. If we trade higher above the recent high, I want to see us get support within that volume imbalance. Start to run lower. Wicks could do the damage, but I'm watching the bodies close. I want to see it respect the volume imbalance, and look at the way it's respecting it perfectly, right at the low. It's good. Now I want to see us use that inversion for value gap. I want to see that fail, and then use price run lower. Boom. So we get stopped out here. Yeah, so you can see I'm stopped out now. I was checking my balance to see if I could allow for another trade, which I can at half risk. So here we are. It's the second trade idea. You'll see in a second here, I closed this trade out. Yeah, I was very hesitant, right? We had S&T at highs, but we had the lows already being taken out on ES and NYM. Just a lot of back and forth that I was considering. At this point, I have that wick consequent encouragement on the 1 minute that I'm watching. You'll see me mark out. There it is. That's where my entry is now, right? Bodies respect to the inversion for value gap. We have a 15-minute bearish for value gap here that's getting respected, which it didn't mark out at the moment, but that's where my logic is here. So enter in on that wick consequent encouragement. It's a nice expansion. Remember, at this point, we're half risk. So I'm in the negative on the day. I'm half risk. I'm trying to look at milking profits and taking partials in order to secure some of those losses that I had. Okay, just switching to a lot of time frames here, just watching price. So yeah, there you see a 15-minute for rally gap. I'm going to be watching that level and the consequent encouragement, the midpoint, the black line in the middle of it, and seeing how price is reacting there. So there we go. First partial is about to be booked. That's why I moved my stop and profit here. Or a break even. At this point, boom, you see me market order 1. I took a partial here because the lows on ES and YM did not get taken out. But NQ did, as you can see, took that low. Ideally, on a good delivery day, a day that I'm not expecting to be choppy, I would be holding that partial to where I originally had it, which we're about to hit in a minute here. Again, see me typing that out there. I'm watching the fair value gap consequent encouragement. Ideally, full target is London low. Again, that's if it was a day where I'm expecting clean delivery. This for value gap, best case, we just continue dropping to our target, but that for value gap, if we do run back up, that's what I'm watching in price. So good, there's the drop to the first partial that I would have had. Again, this is where in the past I would blow accounts. Risk management is very important. Something I'm still working on and getting better at. So you can see me there just below that sell side is where I have my last partial or last runner. It's a -2 standard deviation just below it. So that's why I have it just below that sell side. But yeah, risk management is very important. So first trade I took a full loss, or just about a full loss, but second trade I'm going in half risk. All right, I don't want to take too much of a loss on a day. And at the same time, all I want to do now is make my money back, right? I'm in drawdowns. All I'm worried about is making that money back, not necessarily hitting a home run hit and winning a big trade. So now again, we're starting to work higher. As you can see, right, the black line at the bottom, in that blue box, that's that 15-minute fair value gap, consequent encouragement there, the midpoint. We traded away from it strongly. It's the first kind of bad signature for me. You can see we have multiple 1 minute gaps here, and then that 15-second refined gap within them that, again, I'm watching price. So here we have SMCs at the highs. Those are those SMTs I was talking about earlier for why I originally got in the trade. And then SMTs at these recent highs that I'm watching here. I want to see it start to break that inversion for value gap. Once we get closure below that, I'm expecting a strong break. So if we do that, then I'll move my stop to those highs where we formed the SMT. Okay, nice retracement into that volume imbalance. Best case now, it's a good drop there from it. What I want to see is us completely run though and trade below and close below that inversion for value gap, which we don't have yet. Again, that's all I'm watching now. The orange box and the red box above us, the orange box below us. You know, I wanted to see closure below that orange box. We didn't have it. We started trading higher. At this point, I'm watching the red box above us. Bearish for value gap there. If we trade into that, I want to see price hold us lower. Which is why I'm okay with my stop being just above that bearish for value gap there too. I have some big goals this year with trading, and prop accounts and a personal live trading account that I want to be hitting, that I'm kind of documenting the journey of. All right, that's what I'm doing with these videos. That's what I'm trying to do with these trade breakdown videos. So there we go. That bearish for value gap is getting respected. This is all the way down to 5-second chart here that I'm watching, but 15-second chart, I'll mark it out in a second. There's a bearish order block that I'm watching in price. And then as well as this, there you go, that inversion for value gap that I'm now watching as well. So the bearish order block just got hit and we dropped again. I want to see us close below that. Yep, so there you go. Now I entered on the pass to the low of the inversion for value gap before the closure. So there's that order block I was talking about. Once we had that wick respect the order block and then drop, that's why I entered on as soon as the candle went below the inversion for value gap instead of waiting for a closure. Okay, so this high just went above the recent high, still respecting the bearish order block. Those two recent highs, there's SMT there as well. I don't mark it out just yet, but there's SMT at those highs there that I'm watching. It's very crucial for me, so I should be adjusting my stop here to that. Yeah, so the body of the order block now, again, SMTs at those highs. I'm watching this bearish for value gap now, the new red box I just printed out. I like how I respected it and traded lower. So you'll see me adjust stops. Yep, here we go, break even. Again, I'm half risk in this trade. I'm in profit. I already took 2 partials. I scaled into another position. I took a partial on that. One final runner. So at this point, I don't care if I stopped out. I either want us to stop us out here, or run to the target. And we are about to get stopped out in a moment here. Boom, stopped out. Yeah, really good trading day. Really good risk management. On to the next.